Hi, everybody. Barry McGuire here for Barry McGuire's Creative Real Estate Education Series. It's the Monday main event. We meet up every Monday, or most every Monday, to talk about creative real estate and all the things that surround creative real estate. We bring in lots of different experts to talk about various things: financing, Smith maneuver, insurance, development, accounting, foreclosure, all of those things that touch creative financing. We also do amazing focus workshops, having just finished up what we call the Rapid Cash program. That was a 2-day event on May 27th and 28th, where we spent 2 great days talking about the 6 creative strategies, such as agreements for sale, rent to own, fix and flip, joint ventures, etc. So we do those kinds of focus workshops every once in a while. And on these Mondays, we often gather and talk about topics of interest. So one topic of interest that has come up and is always around is the topic of private lending. So today we're going to talk about private lending. What is private lending? Advantages, disadvantages, why people take advantage, or why people need private lending. And we're going to delve into some of the darker side of private lending. And this is really along the lines of an educational focus. We want everybody listening to understand some of the things that are going out there in the wide world of creative real estate and how private lending fits into that. And want people to understand the facts, how these pieces fit together, and to be careful of situations where you think you're going to be a borrower or a lender in a private lending situation, because, folks, you're not in Kansas anymore when you're not going to TD Bank or RBC and getting one of those kinds of big bank loans. Private lending is the Wild West. It's the untamed frontier. It's who knows what's going on, and you have to tread carefully in the world of private lending. So to help us out today, we're going to bring in the fabulous focus team, as I like to call them. We've got Andrea Workington, who's at the airport waiting to head out to check out one of her, what should we say, one of Andrea's many enterprises that she has going on. Andrea has a lot of things going on. We got Wayne Hillier in the hat and the guitars, running the show, as he always does. Nice hat, Wayne. I like that.
Thank you. It's just I need a haircut, that's all.
Is it? Oh.
It's all good.
All right. But you might have something under that could be.
Nope, just long hair, that's all.
Okay. All right. And Dean Mantai, back from some time off and some having some fun and I guess taking advantage of what you've done with your creative real estate, Dean. You've had a really good couple of years, and I think you and your wife decided you're going to reward yourselves, and that worked out pretty well, I hope.
It did. Yeah. Work hard, play hard, right?
That's right.
Spent a good amount of time in France, Switzerland, and Monaco. So had a good time. Now it's time to come and get back to work.
Ah. Okay, so France, I can understand. Switzerland and Monaco, those are places where guys with high net worth go to, kind of set up their finances. I wonder, wow, Dean, what could Dean have been doing in those kinds of countries?
I didn't have time to get a Swiss bank account, unfortunately.
Too bad. All right. Well, we're going to talk about private lending today. We're just going to, I think, a general discussion of it before we get into some of the specifics. And I think, what was driving this for us, if Donna keeps an eye on what's happening on the wonderful world of the web, and she sees a lot of things that are making her nervous, where people are advertising, they're raising money, they're offering unsecured promissory notes, or that's what it turns out to be when you dig into what the offer is. And so some of that's making me edgy. So I want to talk about that as we go along and get some of your views on private lending. And I think we're going to start with that. I'm going to start kind of in the middle. I want to hear what you guys have to say, just general thoughts on private lending as you've come across it for yourselves, as you've observed it. Some of the, maybe concerns that you have or encouragement that you have for people to look at private lending as a really useful tool. So let's go around the table here. Andrea, you've, as I say, got a number of enterprises going on. You've done a lot of stuff in your real estate investing career. Getting general thoughts from you on private lending that you'd like to tell us about.
Yes, Barry, thank you. I hope it's not too loud in the background here, sorry. I think when it comes to private lending, it's a lot about the know, like, and trust and building rapport with people. It's also helpful to kind of, when you're raising capital, to really have a bit of a presentation or something to give somebody so that they can have some time to review the information and really understand what it is you're asking them to invest in. So I think, the know, like, and trust in educating people is very important as a general statement.
Okay. All right. And we're going to, as we go along, I think folks watching will have lots of comments, and so we're gonna make notes. We're gonna hear what you guys have to say, but also what folks listening and watching have to say, and we're going to try and work those into future Monday main events so that we can explore some of these things in a lot more detail. Today's kind of the general overview, but we're going to dive deeply as we move on in the next weeks. All right. So Dean, let's go over to you and hear about some of your views on private lending, things you've seen, stuff you'd like people to know.
Yeah, so I would agree with Andrea for sure. I mean, it is all about know, like, and trust. I'm of the view that life is sales. That you're not selling at one specific moment. You're always selling. When you went on a date with your girlfriend, she's now your wife. Sorry to say, you were selling that entire time. And so when you have some wins, it's okay to, sprinkle or pepper a little bit of attention on them on social media. Those will help you with some of those things. I know Andrea and Wayne definitely do that, and it just gives you some little bit more respect when you come to the table and you're like, hey, I've got a deal. I know what I'm doing, and then you can kind of go from there. But it definitely unlocks a world of possibilities. You don't want to be relying on the banks all the time.
No, and we've all learned to our dismay that you can't rely on the bank. You think you're one thing as a loyal and successful and bank customer that is increasing your business and branching out and having great success, and you go in and you ask for something that doesn't fit their pretty rigid, narrow guidelines, and you're nothing. You're nothing. So we need private lending. What about you, Wayne?
I love it. I think it's great. I've used it many a times. Promissory notes in general, I guess. Are we talking on promissory notes right now? Just in general?
Well, private lending generally, but
private lending.
One of the topics for today is promissory notes. So
yeah, I mean, there's so many different ways you can utilize it, from obviously promissory notes all the way to like RRSP lending to, so many different things. It's I'm curious which direction this conversation is going to go today, because it can go in a really great way. It's a really great tool to scale your business, to use other people's funds outside of like the normal 50-50 joint venture. But then again, like we've seen so many bad stories over the last 24 months from people borrowing unsecured money and using it, and the market shifting, and I'm talking tens of millions of dollars worth of stories of people who have lost money. So you have to be super careful. Just because you can doesn't mean you should. And make sure you always get education and ensure that you've got good guidance and you know what you're doing, and don't just borrow money just because you can. So
yeah, no, can't argue with any of that. That's that's all good coaching. All right. Well, we're going to back up a little bit and just kind of give a general overview of private lending, kind of what it is, and then we'll follow that thread where it takes us. So, private lending is sometimes known as hard money lending. That's another term that's applied. And I mean, what is it? I mean, private is it's private. It's not, you're not borrowing from a public company. So if you were going to give some money to Andrea, she's got a publicly registered mutual fund trust. That's not what we're talking about. We're talking about private companies. We're talking about private individuals who have money to lend. So that's really what private lending is. And so the next thing to ask is, why does private lending exist? Why does private lending exist? And it exists because often people cannot get money they need through traditional channels. So if you have a construction project you want to do, or a fix and flip you want to do, or you want to buy a chunk of land and subdivide it and be kind of a developer, for all of those kinds of loans, if you pop into your local A bank, any of the big 6 banks, those are very difficult loans to get from them. Very difficult loans to get. And so, I mean, apart from bank policy, which makes those loans difficult to get, you might be a borrower who's got a crappy credit score, or you have you make money, but it comes in irregularly because of the nature of how you earn your money, or you can't prove your income through traditional sources. Again, these are all kind of mainline lender prohibitions on why they won't lend to you. You might need to get money really quickly, and the big guys don't move fast. You might want to borrow short term. They generally don't want to lend to you short term. So for all of those reasons, if you've got a project going on or some reason you need money, you need an alternate lender, and that is often private lending. So, the fact that private lenders can fund those mortgages quicker, that they will go shorter term, and that they are more flexible. Often a private lender will have much more ability to look at your proposal, and if they're good at what they're doing and they can analyze it and underwrite it properly, they can go, well, I've never heard of this one before, but you know what? I've looked at it. I understand it. I think I can protect myself and lend to you, so I'm going to do it. So those are some of the advantages. On the disadvantage side, if you're borrowing from a private lender, you're definitely going to pay higher interest rates. I mean, those interest rates can be, 6% up to 18 or 20%, and everything in between. You're certainly going to pay higher fees, including lender fees, perhaps mortgage broker fees. Legal fees are definitely higher, appraisals. So the cost of private lending is often higher. They are more complex, for sure. They can be more complex, and there's often a ton more paper. I often, as a lawyer, when I see that there are certain private lenders whose names I will not mention today, when I see that it's them on the other side of a loan, I just get cold chills down my spine, because I think I've said this before. I had one private loan put together by a lawyer who also does foreclosure work. But when I got the trust letter from that law firm, there were 21 documents that they were requiring. And there were 20 different conditions that I had to meet, things I had to provide, diligence, various things. So it was a 41 paragraph trust letter. Whereas if it had been from, one of the big lenders, there might have been 5 or 6 things to do. So they can be way, way, way more complex, and therefore way more expensive and a bit more time consuming. And private lenders they don't give you as much rope. If you're having trouble, if your loan is going bad, they're far quicker, I think, to say, okay, well, we're going to try and realize on our security here. We're going to start our foreclosure action. Yeah, great. As soon as you fix the problem, we'll stop it. So Those are some of the disadvantages of private lending. Now, here's an interesting thing. How big do we think private lending is in Canada? Let's go around the table for the focus team. So we're talking all levels of private lending. We're talking anybody who's lending privately across the country. Big guys, little guys, deals on the corner, who knows what. How big is private lending in Canada in billions of dollars? Who wants to take a run at it?
I'm going to say 50 million.
50 million?
I'm probably low, though.
You're a little low on that, Andrea. Pump it up. Dean?
How about 4.5 billion? How about that?
4.5 billion. Well, you're way low too. Wayne, I'll give you,
Well,
you know.
Okay, so now my number doesn't seem so ridiculous. Okay, 7 billion.
7 billion. Well,
Dollars.
I'll tell you, dollars, yeah.
7 billion.
Billion. And that's just for starters. So in 2021, the private lending market in Canada was $100 billion. That's a number from CMHC for how they describe private lending. And it was 2 years ago, yes. It's I was reading some other material that said private lending's on an really about a 5% per year rise. As soon as the economy start rolling along, when people are buying houses worth $1.5 million for starters, they often have to go to private lenders because mainline lenders won't help them out. So anyway, the point is private lending is big. Now, I mean, traditional lending is trillions of dollars. So maybe 100 billion is not that much in relation to the trillions in the more traditional market, but it's still a darn big number. It's a darn big number. So that's just kind of a little rough overview of private lending. But the thing we wanted to talk about today is our promissory notes. Promissory notes. Promissory notes are all over the internet. They are a popular topic. And Laurie May says, I wonder if Olympia Trust sells shares in their business, happy face. Well, Laurie May, Olympia Trust is kind of an outlier amongst the trust side of lenders in Canada. So they're lenders and they have trust companies, they're separate things. But I think you guys have all been around this track long enough to remember when there were a number of trust companies that did the registered plan loans, the RRSP loans. And now it's really Olympia and Canadian Western. Olympia has worked hard on figuring out how to participate in the kind of off lending side of things. I mean, they're a public company, so we can't exactly call them a private lender, but they do lots of things that are akin to private lending. So
we'll be talking more about that later.
Yeah, and we'll get into more about more of that as we go along. But promissory notes. So in Canada, promissory notes are a federally regulated thing. There's a piece of legislation called the Bills of Exchange Act, which is old legislation. Promissory notes used to be way more important than they are today. They were a medium of exchange when there were mostly private banks. They would issue promissory notes and people bought them and sold them and traded them and moved them back and forth. And you could buy one and then sell it. You could do lots of things. Anyway, they're a federally regulated thing. But what is a promissory note? A promissory note is I, Barry McGuire, do hereby promise to pay Wayne Hillier the sum of $50,000 at an interest rate of 10%.
Whoa.
6%? Donna thinks 10 is too much, Wayne. At 10%, and I will repay Wayne in 2 years with one balloon payment, signed Barry McGuire and dated June 12th, 2023. fits on one page. Just it's the loan, it's the terms of the loan, it's the payment, it's the basic stuff of any loan. And essentially, a promissory note is, and this is one of the reasons that it's dangerous and why unsecured notes are dangerous, promissory notes are dangerous, is a promissory note is essentially a handshake reduced to one page. I mean, if I say to Wayne, man, thank you very much for lending me that $50,000 at 10%. To pay you back in 2 years, we'll do one balloon payment of interest at that time. Shake on it, buddy. There we are. Exactly. That is a legally enforceable contract. Now, if I don't pay Wayne and he has to sue me, it's way better for him if he has a piece of paper instead of Wayne and Barry getting into a he said regarding the terms of the loan. So, but it's really a handshake. It's a handshake.
It's a fancy IOU.
Yes, fancy IOU. Yeah. And not much more on it than there is on an IOU. A little fancier. Mm-hmm. So, what's the trouble with an unsecured promissory note? If Barry decides not to pay Wayne, what's the trouble? Dean?
You have no collateral. They can only sue you, and a judge has to rule on it. So it's harder to get your money back, if at all.
Yeah, that's the nub of it. There's no collateral for the loan. If I don't pay Wayne, Wayne has to sue me. He can have a judge say, Wayne, that McGuire, what a shady character. I don't believe a word of what he said. And you had such good testimony, Wayne. I'm finding for you. Yeah, Barry owes you $50,000. He owes you the interest. And I'm giving you court costs with extra costs because Barry's a lawyer and he shouldn't have been like that. And then Wayne goes, great. Okay, Barry, pay up. I'm never paying you, you rat bastard. So what's Wayne going to do? I mean, he now has to locate Barry's assets. He has to hire a bailiff. He has to go through a whole rigmarole to try and get himself paid back. So unsecured means you have to sue and then figure out how you're going to collect. Sue, win, and then figure out how you're going to collect. So Dean said you need collateral. Andrea, what's common collateral for any kind of money loan?
Property, Barry.
Property. Yeah.
So you could offer property. It doesn't have to be real estate. It could be a vehicle or an RV or jewelry or anything that you have that's got value to it. More commonly, we do see real estate, obviously, but most people don't want an artwork collection anymore.
No. So yes, collateral can be anything of value, but the most common collateral in the real estate world that we are all in is property. Most common thing is property. So, it's hugely dangerous for anybody to lend money through an unsecured promissory note. Hugely dangerous. If anybody's going to be doing that, first off, why would you do it? But let's say that somebody, okay, to go back to your comment, Dean, it's know, like, and trust. So if you meet someone meets you and you get to know them, over time you get to like them, and then for various reasons you get to trust them, that's a reason that somebody might lend on an unsecured basis. But if you're thinking of lending unsecured, what would you as a lender want to know about your borrower? And is it any good just to know things? What do you think, Andrea? What would you want to know about your borrower if you're proposing to lend on an unsecured basis?
Well, I think it's important to know what assets they have, first of all.
Yeah.
So, there's certain things that you can do to make your lender feel more secure. So, if the lender knows what the assets are of that person, if they have an idea, for example, what their credit score is, or they have an idea what the person's experience is for whatever they're doing with the money, whether it's a fix and flip or whatever, I think all that kind of helps give people a feeling of safety to
Sure.
a degree. And then I think the other thing that I just learned more recently about, and it might be something for a future show, is something that's called key man insurance.
Right.
So
Yes.
yes,
That's a situation where you recognize that if your borrower dies, you probably are not going to get paid, or there's a smaller chance you're going to get paid. So, as a requirement of the loan, you cause them to get an insurance policy where you, as lender, are the beneficiary. So that's certainly a big factor in larger, more structured loans, especially when one person is really the real gunner in a deal. If that person isn't around, the project is likely to fail. Key man insurance is very important. Very important there. Any other comments from Wayne?
I think why a lot of people are doing unsecured, from what I see, at least in the community, why a lot of people are doing unsecured promissory notes is because they want to get into real estate, but they don't quite have as much money, in a lot of cases, people will lend money in the form of a second mortgage, but for someone who only needs $20,000 or $30,000, sometimes it doesn't make sense financially for them to put such a small amount in the form of a second mortgage on a property. So I see a lot of newer investors trying to get into the game, trying to get a little experience, trying to take some action, get their feet wet. So they're willing to invest some smaller amounts like 20,000 or even 5,000 into some of these fix and flip deals or BRRRR deals, just to kind of get their feet wet. Mm-hmm. And considering it's such a small amount, it's not worth it to kind of put it in the form of a second mortgage, in their opinion. So that's why I'm seeing a lot of unsecured promissory notes. And one comment I was going to make earlier was in your example where, you were borrowing $50,000 from me, I think it was. At least that's a reasonable amount to go after in the event that you told me I was a rat scallion or a rat bastard or something.
I was going to say rat bastard, but I didn't quite come out of my mouth.
In a situation like that, see, I would go after you for $50,000, but going after you for $5,000 is not quite worth it. When you think about the retainer for a lawyer, in most cases, is what, like $2,000, $3,000? And then the hours for a lawyer to have to go after them and serve them just the initial documents. In a lot of cases, I've seen people walk away from a $5,000 promissory note that was never paid back because it just wasn't worth it to go after it legally. So it is kind of scary. It's kind of scary when you see newer people kind of doing this kind of stuff. And I'm seeing it a lot right now. A lot.
Yes.
Yeah.
So for that particular point, here's a really, really important point for Alberta. Now, as much as promissory notes are regulated federally by the Bills of Exchange Act, the way they work in various provinces, it varies from province to province. And I'm really, an Alberta guy, so I know about Alberta, and I have a particular Alberta situation that would help some of the folks that Wayne is talking about. People want to get into they're starting out in real estate. They don't quite know what they're doing. They go to meetups. It's exciting. They meet people. Things sound interesting. They like somebody. They want to invest some money, so they want to lend $5,000 or $10,000 or $20,000. So if Wayne and I are doing that deal, and I agree to lend Wayne, let's say it's one of the smaller ones. Let's say it's $5,000, where you're right. It is too expensive to go see a lawyer to say, you know what? I recommend that. Fine, you can take the promissory note, but you want some security, and in this case, it'll be a mortgage collateral to the promissory note. So fine with the note, but we want a mortgage in support. So if it goes bad, we know there's an asset here that we can get at. So it's too small to do that. So Wayne and I work out a promissory note. I agree to lend Wayne $5,000, that same 10% rate, due in 2 years by one balloon payment. And there's another paragraph in the note that says, and this loan is for the renovation Wayne is doing at 123 Spruce Street, Leduc, Alberta. Okay. So now Wayne doesn't pay me back and I'm looking to sue. And I go, okay, you know what I should have done is I should have registered this note, promissory note, against the title to 123 Spruce Street, or against a different property that Wayne might have. But let's just say it's 123 Spruce. I go, oh, well, it's all right. I mentioned it. Everyone knows that the loan is for 123 Spruce. So I should be able to put that against the title. Can we? The answer to that is no, you can't. And the reason that you can't is because that promissory note doesn't have the magic words for Alberta, where Wayne says, I hereby charge my property at 123 Spruce Street, and you need the legal description, with repayment of this debt. It doesn't matter that we all know the loan is for 123 Spruce Street. Wayne hasn't charged that property or a different property where there's some equity with repayment of the debt. So the note, the promissory note with what's called a charging provision, is a step up from an unsecured note. It's not as good as having a mortgage, but it's a step up from the unsecured side of things. So folks, anybody listening, if you're thinking of lending money via promissory note, make sure it has a charging provision. And if you're doing this 3 weeks from now or sometime after this Monday main event, you don't remember what this is all about, email me and I'll help you with what the charging provision should be so that you can at least register it against the title. So now, registering it against the title, what does that do? It at least shows anybody else who's dealing with Wayne or looking at the title that there's a loan against the property. I mean, perhaps Wayne or his alter ego, Bad Wayne, is borrowing money from 20 different people. He goes, I need $100,000. That's just $25,000 notes. This is easy peasy. With my connections, I'll have this done in a week, says Bad Wayne. So you can, in Alberta, put a charging provision in your note, which allows you to register it against the title.
Okay, can you repeat that?
Okay, can I repeat the provision, please? Yes, Babette, I can.
Who will be writing this down?
The provision that we put in a promissory note here in Alberta is that this is the maker of the promissory note, the promisor, I, Wayne Hillier, do hereby charge my property, and then you put in for sure the legal description, but probably the municipal and the legal description, with repayment of the debt. So I, Wayne Hillier, do charge 123 Spruce Street, Leduc, Alberta, with repayment of this debt. And in Alberta, that would allow you to register that note against the title, which is not great protection, but it's some protection, and it's better than having a totally unsecured note. Right. So I want to go back to what Anthony Domino said. Anthony is a lawyer in Ontario. Babette's a lawyer in Ontario. And Anthony says, make sure you have some collateral. So Anthony, that's good coaching. And that's where we're getting to here, is to say that the unsecured note is worthless unless you have an honorable debtor to a large extent. The note with the charging provision is better, but then as both Andrew and Dean pointed out, you got to have some collateral, and the standard collateral that we would have here in Alberta in most places is real estate. Not that you can't take a bar of gold or a beamer or jewelry, but real estate is better. And so you can borrow and lend money just by way of a mortgage. You do not have to have a promissory note. You just do it by way of a mortgage. Why is a mortgage better than either the unsecured note or the note with the charging provision? And the answer to that is that mortgages have been around forever. They're litigated and in court all the time. All of the rules around mortgages and how they work and what you can get as the mortgage lender are all really cut and dried, sliced and diced. Any proper mortgage will say, if you don't pay, you can put in a receiver, you can organize the insurance, you get paid all of your legal fees. This is an important point. Unless your lending document here in Alberta anyway says that you can collect what they call solicitor and client fees, which is all your legal fees, then you can't. And all you get is court costs, which are much less than the big bill that you're going to get from your lawyer. So a mortgage is way, way, way better security from every different angle. And if the loan justifies, as Wayne said, maybe you're not going to do a mortgage for $5,000 or $10,000, maybe even $20,000. Probably at the 20 mark, you should be thinking about it. If you're into the larger numbers, you would definitely be fine taking a promissory note, but get a mortgage collateral to that allows you as the lender to really control the property, call the tune, and assuming there's equity in the property, get paid back every penny you've lent, all of your expenses for property managers, all of your legal costs, every cost that comes up because of a defaulted loan, you can collect through a mortgage, and you can't through a promissory note. So those are important sort of steps in the private lending process. Questions? Let's get some questions going here. Hello there, Senor Cabral. What is a general security agreement attached to a promissory note? A general security agreement is another form of debt instrument that talks about what the debtor owes and how you as the lender might be paid back. It usually refers to personal property or property that can turn into assets, fixtures on a property. It is a promissory note is a debt instrument. A mortgage is a debt instrument. A general security agreement is also a debt instrument. And it's one that is registered here in Alberta at what's called the Personal Property Registry. And it typically shows up for washers and dryers and air conditioning systems and fancy hot water tanks and heating systems. Those are money lent probably by a promissory note with a general security agreement as well. For what we're talking about here, a general security agreement doesn't usually show up, and it's quite a bit more sophisticated. And you definitely wanting to talk to your lawyer about, do I need a general security agreement for this loan? So that's one question. What else we got, Donna? George says, if the borrower is borrowing cash on a promissory note and the borrower is using it for a property, could you as a lender put a lien on the property if the deal goes south? Well, so now we're talking different provincial legislation, George. You are in Nova Scotia, if I recall. You're going to have to talk to your Nova Scotia lawyer about if you're going to lend and just take a promissory note, can you register it? We've talked about it just a couple of minutes ago. Here in Alberta, if you have that charging provision in your promissory note, yes, you can put a lien on the property. But as I read your question, George, I'm suggesting that if you can put the promissory note as a lien against the property, do it right at the beginning when you are making the loan. Don't think about doing it when the deal goes south or starts to go south, because it might be too late. You might try and put it against the title and go, great, first mortgage, second mortgage, third mortgage, somebody else's promissory note, and now I'm going to be in fifth position on this title. You want to be as close to being the first lender or second lender as you possibly can. Typically, lenders get paid out in order of their priority. If I'm the first mortgage lender, first means first. If I have to foreclose, I can foreclose, get my money back. And if there's money for the second mortgage, great. But if there's no money for the third mortgage and two promissory notes, then those guys don't get paid by virtue of this security. So I think in most provinces, you could register a note against the title, but check for the local rules and do it right when you're making the loan, not when things are going bad. All right. Any other questions? Babette, if federally regulated, does it mean provincial securities commissions are out of the picture? Have to think about it. Okay, Babette, well, you think about that and we'll watch for your comment either today or later. What is the statute of limitations for promissory notes in Alberta and what can extend the time? So there's been fairly recent changes across the country, starting in the 2000s, where the provincial rules around limitation of actions change from common law rules to legislated rules. So, for instance, the rules used to be that you had 6 years in which to claim. So you make a loan, somebody isn't paying, and you had 6 years in which to make your claim. If you didn't do it within 6 years, then you couldn't do it. But the time period started from when you first lent the money, not from when the loan went bad. So that was putting people at a disadvantage. Often loans would be fine for a while, but then they wouldn't be, and then it was too late to put in your claim. So in most provinces, the limitation period is 2 years, but the 2 years starts from when you first make a demand to be repaid, not from when you first lend the money. So a loan might be going along nicely and you're getting payments and all is fine, and then all of a sudden it stops. So from when the loan stops and you go, hey, I'm not getting paid, and you work with your borrower for a couple of months and it's promise this and promise that, but still you're not being paid. And then 2 or 3 months out, you go, okay, I've had enough. And you send them a letter saying, I demand that you pay me back, by next Friday. Now your limitation period of 2 years starts to run from when you made that demand. So the rules are different, again, in each province. They're pretty similar, but there's local differences. So do check on that. Phew.
There's more.
Getting carried away.
But wait, there's more.
But wait, there's more. Okay. How do I know what order I am in when I'm the borrower?
Lender. Has to be lender.
Well, Patty, again, here in Alberta, really the only way that you would get to know is you would get a copy of a title, assuming that your borrower is planning to give you security against a piece of real estate. You could look at that title and see what's registered against the title. That's how you would know where you stood in the chain of lenders. However, if you're talking to Bad Wayne, who's issuing 100, or sorry, yes, well, not you, the other guy, he needs 100 grand, so he's borrowing $5,000 from 20 people. I mean, you wouldn't know where you stood there. So that's why lending by promissory note is difficult. It's a handshake. I mean, Dean, tell us some stories. I mean, think about this. I don't want to put you on the spot. Think about situations where you've lent money and it seemed like a good idea at the time, but then later you find out that somebody is up to their ears in debt in a whole bunch of different places, and there was no way for you to check on that. They didn't tell you the truth, and you're taking somebody's word for it. It's a handshake, and those are fine with honorable people. But if people turn out not to be honorable, that's where the unsecured baseball bat will whack you across the head.
And honestly, Barry, it doesn't even have to be that they're not honorable. Good people can get into bad situations, right?
Yes.
I can personally attest to one story that comes to mind, right? This is, gosh, I don't know, 15 years ago. I lent money to a friend that I had earmarked for a special purchase. I had it kind of stowed away, and he came to me and said, I can't make my mortgage payments. Me and my family are going to be out on the street. So, you know, regardless of what he signs and the post-dated checks that he wrote, I don't think I saw any of that money back. And I not only lost the money, but I lost a friend. So it is what it is.
Yeah, it is what it is. And it's a great point. Circumstances do change. I have a couple of those stories myself where I dealt with people not on the real estate side of things, but people who were at the head of the field that they were in. Top-notch people, great histories, and you know the market changed on them. Things that they could do nothing about changed on them and all of their expertise that I was relying on. I didn't underwrite the loan very well, and they lost a lot of money, and I never got paid back. So stuff happens. Stuff happens, and we probably all made a few of those loans.
I've got some more questions.
All right, more questions. Did I say promissory notes do not fall under securities regulations? No, I didn't say that.
No, but that did, and Antonio did.
Okay. All right, so I'm a question or two behind and perhaps catching up with the comments. So my curator of
Okay,
questions.
well, we'll go to another one for now.
All right. Okay, can you use the charge provision against another property, not the subject property? And if so, how common is that? Yes, here in Alberta, we could have said to Wayne, we're not going to put this against 123 Spruce Street because there's really no equity there. So you could have said we're going to put it at 5, 6, 7 First Street, where Wayne has a property where he's got lots of equity. So you could put it at against a different property. You could put it against a number of properties. So there's no limit to what the charging provision can grab. You just have to make sure that the person says that they charge the property with repayment of the debt.
Okay, next.
All right. Monica says,
Say it out loud.
Monica says, after payout, do lenders have to get anything signed by the borrowers? They don't. Lenders don't have to get anything signed by the borrower after the borrower pays all the money, but the borrower should get the promissory note back from the lender marked paid in full, because that is great evidence that there is no more debt there. Some nasty lenders might try and collect twice.
What about in practice? Do any of these guys do that?
But now, I'm gonna ask our focus team. Do you guys ever yourselves borrow or lend via promissory note? And if so, have you got any coaching for your own for how you handle it? This is broad brushstrokes we're talking about, but maybe you've got some specific insight.
Yeah, I can start off, Barry. So I do receive money via promissory note, and I always offer security. I put the note in both my corporation and my personal so that I'm giving them more security that way. And, usually it's a good idea to be very specific with what you're using it for, so that people have an understanding of what the timeline is. And people can understand that timelines sometimes change, but keeping up communication with people is very important. And I've had feedback on my promissory note that's 2 pages long, 2 full pages long,
Wow.
that it actually is fairly good. Now, I'm sure, Barry, you could always improve it, but I have had feedback from other people that says, it's one of the better ones that they've seen. So yeah.
So that's important, and yeah, I mean that's a good point, Andrea. Is you start out with a document, you work with people, they make suggestions, maybe they took it to their lawyer and some comments. Paper can be important. Something written on a scrap of paper that's obviously just somebody pulling words out of their head or off the net is not an impressive way to try to convince somebody to lend money. So better documentation where it looks like you have some idea what you're talking about is definitely better. about Dean or Wayne? You guys do any note stuff? Dean?
Yeah, for sure.
What do you do?
Absolutely.
All right.
I've done some with collateral and without collateral, unsecured. It really depends on the relationship that you have with the person. I'm not out advertising it to the public. I've got good relationships with some people that we borrow funds from, and whether it be on their HELOC or whether it be cash. And I think that it's important just to make sure you stay conservative and not over leveraging yourself. When we borrow funds, it's not because we don't have money. It's because we would rather borrow the funds and pay interest on that than use our own capital. And that's a strategic thing for your own business. But, we also have cash so we can pay people back, or lines of credit or something like that. We can pay people back. When you're borrowing money, and you've got no access to any funds or line of credit or anything to pay people back. And, and it's all in one deal, and it's all on one, I got one shot. I got to make this work. Otherwise, you know what I mean? It's extremely risky. And that's where I see most of the promissory notes happening right now. And you can't just, your diligence, and you can't just be on networking. You know what I mean? I heard that person's a good person. I think you need to be super cautious. And that's what we always have been. I like to keep money liquid just in case I have another deal that comes up, and then worst case scenario, I can always pay back that loan if something bad was to happen. I don't recommend unsecured promissory notes. I really don't. I think it's very risky for the borrower and the person lending the money. I think it's just I don't ever want to be in a position where I'm extended that far. You know what I mean? And to have that level of pressure to pay someone back. So I've got so many multiple opinions of this. I think promissory notes are great for certain circumstances, but I've just seen so many people get burned in the last 24 months, and the stories that we have is, I don't want to scare people away from it, but just be super careful, please.
We have more questions.
Dean, did you have anything to add there?
I agree with Wayne. There is a degree of caution. I use both as well, and I agree with specifically what you're saying with new people, and just the word on the street is this person's a good person or whatever. But there's a time for everything ultimately, and there's a time to use promissory notes, and there's time not to. So I typically, for a lot of my flips, if it's like somebody's paying for the house, first mortgage, absolutely happy to secure it. If it's a $50,000 renovation, I guess if you want a second mortgage, but in a lot of cases, my lenders don't. So again, it's totally back to the know, like, and trust. But do your due diligence. Don't invest something you're not willing to lose. Would be maybe the other thing I would say, and I guess that's about it for my 2 cents anyway.
All right, we'll get a little, folks, if you're thinking of doing an unsecured note and you're new to the game, definitely reach out to the folks around you, folks with more experience, and talk to them about it, and so you can find out on the risk side. Wayne?
I think another good thing to add, if you're a lender and you're planning on lending some money to someone, a good question to ask is, if for whatever reason this deal doesn't work out, or if something happens, how do you intend? What's your plan for paying me back?
Yeah.
It can't just be, this is it. This is the only way. This deal has to work. Or at the very least, I break it. It's got to be something else. Tell me, if worst came to worst, your worst case scenario, how do you intend on paying me back? And just hear them out and see what kind of answer they have. And if they don't have a very good answer, then I wouldn't do it.
Yeah. Deals do not work out in the best of circumstances. Many a deal has crossed my desk where it looked like it was a good deal, a solid deal, experienced people, and stuff happens, folks. Stuff happens, and it's almost always not malicious. Just stuff happens. But so that's good coaching. When this doesn't work, how are you going to pay me back if this particular deal doesn't work? So, all right. Other questions. Patty says, what should you do when your private lender won't provide you with any documents other than just providing the promissory notes? Okay, Patty, I'm going to ask you, what should you do? Patty says,
It takes a little longer.
Patty and I have telepathy, she and I, so I know what she's saying. She says, well, I'm probably not going to lend if they can't give me some comfort that somehow a promissory note should be all I would ever ask for. And why would I ask for anything else? So, I mean, Patty, you got to be careful. Sounds like, you might not have been comfortable with the situation. Got to ask lots of questions. Remember, it's unsecured. Carrying on. Donna, more. Sean, I liked your comments, by the way. Sean Impey had really good comment there about friends and money. Julia. A succinct answer from Julia for Patty. Run.
And there's Patty saying,
Patty says, I have asked for corporate documents, appraisals, mortgage documents. Absolutely. You're doing the best sort of diligence you can to, to see how you feel about the security side of your promissory note, and keep. Antonio says, if there's any doubt, there is no doubt. Goodbye to the loan.
okay,
All right. Donna, what else? Julia, in case of a dispute or disagreement regarding the promissory note, what are the potential dispute resolutions, or are you SOL? Shine out of luck, that stands for. Anybody doesn't know that.
shooting right out.
So what are the dispute resolutions? So if you can't work it out by discussion, then your resolution is court action. If you can't figure it out and talk and agree and rework it and find something that fixes the problem, then really on a unsecured promissory note, you have to sue them. And all that is an action in debt. You can go, and if you can prove the loan, the judge will give you a judgment. Then you have to figure out how you're going to collect. When you have a secured promissory note, you know where to collect from. Wayne.
What about like mediation as well before you take it to court?
Has to be, to enforce that, it has to be in the promissory note as a clause. Should we have issues and can't agree, then we both agree to go to mediation, and then you figure out how you're going to find and appoint a mediator, who's going to pay for it, timelines, etc. It's got to be, and of course, people can agree to go to mediation.
Yeah.
It might not be in the document, but they could agree to go. But if they don't agree, you can't force somebody.
I was going to add that as well, Barry. Sometimes that's part of suing. They'll say, well, what about mediation? But as you said, both have to agree.
Yeah.
Yeah.
Lori May.
We're going to go quickly here.
I didn't say Lori May's comment. Can I have that back? I didn't want to have her out. In my experience, the borrower needs money more than the lender needs this particular deal. If you don't get the info you need, move on to the next opportunity. Good coaching, Lori May. I love that. That's exactly right. Can you recall a loan on a promissory note early? You can't recall it early if it says when it's going to be paid, unless the loan is in default, or you might set up your loan as a demand promissory note. Demand means you can call for it anytime you want. So potentially good for you as a lender, not good for a borrower who needs to know that they can have the money for a certain length of time. So default or demand would allow you to call your note sooner than the maturity date. I guess a demand note wouldn't have a maturity date. It's just due on demand. Okay, what else?
Okay.
Generally, promissory notes are unsecured lending and come with high rates of return because of the risk. That risk. If the borrower offers security by way of a mortgage, then it's no longer unsecured. Correct and correct. What is an appropriate rate of return to expect at that point? So if it's going to be a promissory note secured by a mortgage, how do you figure out what the return is? Well, that's called underwriting the loan. If you're going to be a first mortgage on a property where the seller, or you're lending $50,000 on a property worth $400,000 and the seller has $200,000 worth of equity, that borrower might be able to say, you know what, I'll pay you 5% or 6%. That would be, down at the low end. If it was, a third mortgage that chewed up all of the equity to 100%, you might be getting 18 or 20%. And maybe that wouldn't even be enough, depending on circumstances. Okay, next comment. Very important to have a strong promissory note written up. There are so many aspects that get overlooked.
Asbestos. Sorry.
Thank you, Donna. God, everyone's a kibitzer. So yeah, a strong promissory note is good. Andrea, so from your other comment about improving your note, I mean, has your promissory basic note developed from basic to something that's a little more complicated with more things in it? More?
Yes. So it started as maybe half a page, and now it's 2 full pages, and it goes through, what happens if I die and things like that. So this is where, as we evolve and learn, we really want to make sure the other person's feeling good about what the note says, and that they're feeling a measure of security as much as you can with a promissory note.
So it's, the knife cuts both ways there. It's better security and better comfort. So, well, folks, we've come to the end of tonight's show. Obviously, there's lots going on in this topic. And as we get into more aspects of private lending, we're going to have more to say. But I can't leave Julia's comment alone. Can you just leave it up in the chat? Okay. Julia, took a long time to type that. I don't want to ignore it. To add to Wayne's comment, if worse comes to worse, how will you pay me back? That's Wayne's comment. I would also add, how and what can we do with the property to make this a win-win for us? As lenders, as a responsibility, we need to complete due diligence and know that we are in a position of losing our money and maybe inheriting a house. Just as risky for the borrower as the lender, everyone is responsible for their position in the deal. Just making this comment as there are lots of... There are lots. Okay. Thanks, Julia, for that. All right. Wayne, Andrea, Dean, thanks you guys for coming on. We'll be doing more of this. We'll figure out some parameters. We'll get back to you. We'll work on ideas and comments for the next show. Donna will be looking at the chat to see what we didn't answer today. I bet there's some things you and I can talk about in the next while. We're not going to ignore anybody. We want everybody to have their say and make sure that we really give this topic a good going over. Finishing off with anybody thinking of lending via the unsecured promissory note, think long and hard. Maybe re-listen to this hour and hear some of the comments again, because it's been really good coaching from a lot of different focus team leaders as well as attendees. So thanks, everyone. Have a great rest of the evening. It's 28 above here in Edmonton, so we're going to be out on the deck doing a little barbecuing. Hope everybody has a great time. Good night, everybody.